Patty O'Malley, Mr. Digital. Oh, this is awesome. Love it when we have a good. Can you hear me? Can you hear me? You might have to reboot.
I think I see what's going on.
You're not muted. Uh-oh.
Maybe I can hear you now. Vito.
We are coming in
Vito.
much better now.
I still can't hear you. Can you hear me?
I cannot hear you. You're not muted on my end.
Audio output. Here we go. How about now?
Hello?
No?
Hello? Hello?
I can hear you. Okay. I can hear you. All right. You still can't hear me. How about now?
Check your mic.
Yeah. I mean, it's
Check your mic on the Melon software, the Talk Studio software.
Yeah, I'm checking it on there. And it says like it's showing levels.
I'm always blaming you, but it's me. Can you hear me now?
Yeah, I can hear you, no problem.
I can hear you. It was me.
Okay. All right, cool.
I usually have my headset plugged into my computer because I listen to videos, and then when I don't do it live enough, I don't do live enough. All right, welcome back to our show, the Patty O'Malley and Vito Scarneclacini show.
The Chini, I like the Chini at the end. Hey, so I'm trying a new mic that I got. So I don't know. We'll see if that improves my video. I'm still waiting on the camera to get here though, to make my face prettier.
I hope it's an expensive mic.
No, camera, not mic. I need help with the camera, not the mic.
Right. I hope it's an expensive camera.
There you
go. How are you enjoying the heat?
You know, as I mentioned, and I'm sure you remembered from our last conversation, I'm in southern Colorado right now. And I thought it would be a lot cooler here. It is not.
No, it's God's country, man.
Yeah.
That place is pretty freaking amazing.
It gets into the 90s regularly and high 80s. However, it takes a little bit to get there. Like from 1 o'clock, you start to really feel it, and 2 to 6, you really feel it. But it cools down great at night, and they'll have random thunderstorms come through all the time, which I'm not used to being a California kid. You just, it's like a seasonal thing, not like a all year thing.
Right. So you get thunderstorms, which are awesome. We don't get those here at all. Ever.
No. Southern California, even once in a great while. But here, almost not every night, but a weekly occurrence for sure. Last night, man, that thunder was loud. Some of the loudest thunder I'd ever heard in my life. And the dog was not happy about it.
The dog was used to it.
Yeah.
I years ago, I want to say 7 or 8 years ago now, we had one of those freak storms where we actually had lightning here, and it hit right on the street, right in front of my neighbor's house. And I knew it because it came in loud and clear, broke my eardrums loud.
Wow.
And then I went to some kind of thing on some website, livelightningstrikes.com or something, and smack dab right in the middle of the street. It's really cool.
Nice. Yeah, that stuff is awesome. Being near a military or on a military post most of the time. I'm here at Fort Carson, right? They don't play with the lightning, right? There's lightning, it kind of stops training, stops whatever's going on. So it was kind of neat. Last Saturday evening, in the afternoon, they had it called their Freedom Fest. Right, of course. What else would you call it? at the big park here on base, and they had food trucks and a bunch of stuff out there, and live music, and a bunch of bands I never heard of, but they were great. And sure enough, them clouds start rolling in though, and we left just in time for the downpour and the lightning. But it was only like I said, it's like flash storms around here. Like 20 minutes later, it's done. You know, it's kind of like living in the South somewhere.
Well, I hope you like skiing, because a couple more months you'll be able to go skiing here pretty quick.
Yeah, so we don't plan on being here much past January, so we'll see what we can take advantage of while we're here.
Right on. Are you on ATD or something, or active duty, or?
Yeah, I'm on active duty. Started in March and runs till February.
Nice.
So I got called
So,
up a little something.
why are we on right now? Aren't you supposed to be working? Aren't you on the government dole?
I'm on your dole. Thank you for paying my way into not working right now.
Happily pay as much taxes as I absolutely need to, and not a penny more.
Amen, brother. That's what I tell people whenever we're talking about that part, man. Like I only want to pay my fair share, not less, not more.
That's the beauty thing about having a business, is you can write a lot of stuff off. We're a little conservative on that. We don't write off as much as we need to, as we can, just because we want to stay away from the IRS. We don't want an audit. So if we ever have an audit, we'll come through pretty clean, I'm pretty sure. I mean, what do I know? I'm just a freaking real estate guy.
You have years of experience filing as a small business owner, right? And
yep.
And I think it's so true what you're saying, because in the age of TikTok and other social media platforms, I can't tell you how many times people shoot me these awesome tax strategies that get marketed, and the short answer, the short answer I get people like, yeah, that could work, and keep layering stuff on. That way you keep putting that flag up for the IRS to come look at you. So.
You know what? Mostly for conversation pieces. That's all. Just checking in, telling you that I love you. That kind of thing.
I wasn't talking about you. I'm talking about like people in general, like just friends, clients. Listen, I think you shoot things that are great conversation pieces to talk about. But I'll get some wild stuff like, "Hey, man, did this work?" Like, yeah, technically it could work, but you don't want to do that, man. I'm not your tax
cash business. You could sell marijuana on the streets and not have to pay taxes.
Or like one, for example, like hiring your kids in your business, totally works. It is absolutely a doable strategy, and it's not that hard to do. Where it falls down is people pay more their kids, and they don't keep good documentation.
Right.
And that's where that's where you could potentially run quite afoul of
the other negative to that is if they're making money and they have to show their tax returns to, say, a grant or a scholarship for whatever low income or what have you.
Yeah.
Then you're less of a chance of getting those types of things. Like for my GI Bill for my kids, because I have 0% disability because of my knee and my stitches.
Everybody knows he's more disabled than that.
Yeah, but I'm still arguing with the VA about that.
Oh, really?
Yeah, they won't.
Wow.
They've acknowledged the fact that my knee was hurt on active duty.
Wow.
And they say it's not enough to justify a rating. So that plus my ears and tinnitus and backaches, and then I still haven't gone through the whole PTSD thing, but I'm not super affected by it, and my motivation to go through. One of the things that affect me through PTSD is I fucking hate standing in line. That's a non-starter for me. So if there's a line, doesn't matter if it's waiting for a movie or I freaking just get anxiety ridden. I can't. And because in boot camp, they made us stand in line for 4.5 hours at attention and couldn't move A to B. So the guy in front of me was right here and the guy behind me was right here. Couldn't move. And yeah, so, and like whenever I'm in big crowds, I have to get away. I have to give myself 10, 15 minutes every once in a while.
I feel that.
So
I can feel that, man.
But thunder, lightning, I'm cool. I'm good with big booms. So hey,
Right on.
we were texting back and forth talking about bonds and insurance and the NAR commissions. What do you want to start with?
I don't know. I mean, we can talk about the bonds and insurance. I was trying to find a good graph to show to help kind of talk about this, but um,
We'll break
let me
it
ask you a
down
question.
because go ahead, ask the question.
No, I was going to ask you, like, what made you think of that, or how'd that come up? Can you give me a little context, like maybe talking to somebody, or you saw an article, or like what was it?
Long time ago, I knew somebody that was very well off. He said, "Insurance is for suckers," which I get it. It's expensive. It's getting more and more expensive, especially
Yeah,
if you're in the States, or if you're like in Florida, where the average cost of insurance for a house is $10,000, which is the reason why you're seeing a lot of people moving out of Florida right now, because it's just not affordable. Well, I remember that a long time ago, and then a couple of days ago or this morning, I can't remember, something popped up on a TikTok, and they said, um, "You don't have to have insurance; you just need a bond. You can just have a bond." I'm like, "Oh, well, how does that work?" So, can I have a bond for
oh,
my car insurance? Can I have a bond for my house instead of paying my insurance company? Can I pay myself? And in fact, I read an article somewhere along last year when the hurricanes went through, and this one couple lived in Tampa or something, and they said, it costs us $6,000 or $7,000 a year for insurance, and they felt that if they took that money, parlayed it into a savings account instead of an insurance plan, the chances are you'll never use it, but if you ever do, it'll be there for you. They didn't have a loan on the property or on that property. They didn't have a mortgage. Mortgages require you to have fire and whatever damage insurance on it. And our buddy Tyler can further explain that, but I can tell you, you can't get a loan unless you have insurance. Now, can you have a bond on that instead? And do you know anything about that?
you know what? I have to apologize. When you first talked about the situation, I was thinking bonds, like market bonds versus investing in insurance, as
Yeah.
those two
So
kind of get
this is
closely
more
related.
like a surety bond.
Yeah, 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 yeah. No, that's a great topic we should talk to Taylor about, because that's not something I'm super
Taylor.
like. That's not quite my lane. Um, that would be a great topic to talk to him about,
Yeah.
for sure.
And
So
I think we have to talk to more people about um, insurance these days, because insurance is getting out of hand, right?
it's pretty wild. It's pretty wild. I was just reading an article the other day about the state, the exact title, the dude in charge of insurance in California.
The
God,
commissioner of insurance.
commissioner, yeah. So they were having hearings about all the things that he should be involved in, and he wasn't there. He wasn't showing up to the hearings. And I was like,
Why would I have to do that? He's just a
yeah.
freaking talking
So
head.
now I take it with a grain of salt, because people got an agenda and an axe to grind. So maybe there was a reason. However, either way, he wasn't there. So
Ricardo Lara.
yeah, there you go. That guy. Let me see if I can find that article real quick. I should have saved it. Next time I'm gonna do that for when we're doing this. So I can.
But yeah, so like if you're buying a house in a high fire area, such as the mountains up there, you're paying extra money. It's almost double. Sometimes it's triple, depending on where it is. And California has like a safe plan. I don't know what it is, but it's issued by the insurers, is guaranteed by the state, and it's a lot more expensive. Some insurance companies will absolutely not even bother putting a plan on that house. So if you're buying a house up in the mountains where there's trees and septic and propane, it's a high fire area. Like a couple, 3 years ago, we went through massive firestorms. People were finding it really difficult to find insurance. And if you could find something. I don't know the rules and regulations about that. So I guess you and I should dig around and do some more information or more research on it.
Or leverage some folks who know more than us. Yeah, I recall the conversation we had. You remember the gentleman's name who does the claim reviews, right? So like
insurance claim guy.
Yeah, he had a very interesting comment on how insurers, in this case, property and casualty companies, were running their businesses, large insurers. I don't know if you remember this. He basically said that it's from mismanagement that these carriers were increasing their
premiums,
the premiums to premium payers. Yep. So that was an argument I had not heard, but I could totally, like, you're not going to advertise publicly that the reason why we are raising rates is because we have horribly mismanaged our business and our cash flow and our and everything else. And I don't think it's a coinky dinky, as they say, that this all happened at the same time that interest rates went up. Why does that matter? Most insurers, specifically life insurance more than property casualty, but property casualty carriers too, they many of them offer the same coverage. Farmers, for example, they do life insurance, permanent policy type, whole cash value types, which rely heavily on are tremendously affected by interest rates. They invest in fixed income products, right, that are affected by the interest rate. So there's an inverse relationship when it comes to the interest rate and the value of a bond. So just for example, right, was it 2022, 23, the rate went from like, I don't know, 1 to 2%, nothing. Yeah. And it jumped up, right? Like in 1 year.
Mm-hmm.
And so all these carriers, they invest in long-term tranches of these bond funds, right? And so what happened to their, when an existing bond with a lower rate can be replaced by a newer bond with a higher rate, the value of the older bond goes down, right? Because you can get a newer bond with a higher rate, right? So all those companies invest in those kinds of things to help their, help manage their liabilities and because that's just how it works.
We have 6 or 7 banks across the United States that have gone belly up, Silicon Valley Bank being one of them, who invested heavily in venture capitalists and startup banks. But a lot of their money came from selling paper, selling loans to mortgages. And when the rates went up, the exact same thing happened. And these insurance companies, especially life insurance companies, but they take this huge wad of cash and buy bonds with it. And when it was 2.5%, they were making hand over fist. But then when the rates went up, their bonds went to trash. And get rid of that stupid thumb. Their bonds went to trash. And now the insurance companies are hurting because, think about this. I'm on a string for some kind of video thing where I'm seeing foreclosures coming, and foreclosures on the real residential side isn't that bad right now. We're still at an all-time low. You see all the crash bros saying, "Oh, real estate foreclosures are up 150% from last year and the year before, where we had a foreclosure moratorium." Back in 2008, we had millions of homes, or 200,000 homes that were bank owned on the market at any given time across the United States. We just don't have that. We don't have those numbers. We had, I think, 193 homes all across the United States that are bank owned right now. That was from today. We have, literally zero, less than 1% of the homes that are being listed for sale are bank-owned properties right now. So we don't have that foreclosure process. We have pre-foreclosure, which means, I'm backed up 2 or 3 months. And when a bank says, "Hey, you haven't made a payment," they have to issue a notice of default. And that's where that happens, it becomes public, and then they can generate numbers. We see those numbers popping up, and maybe in 6 months to a year, we'll see it. Your internet's dead, by the way. We'll see it pop up again, but who knows? I mean, we just don't know because that's the future. I don't do crystal ball.
Yeah.
So right now, what we're seeing is insurance companies, big investors, big, huge investors that buy into multi-million dollar, tens and 20s and $50 million apartments and high-rise buildings. They're going into pre-foreclosure or being foreclosed upon at this time. There was a two or 300 unit apartment or building in San Francisco that just sold. It used to be somebody bought it a couple of years ago, like 2021, for $60 million or $63 million, and it just sold for $6.5 million.
Wow.
Because they mismanaged it and they couldn't afford it, and all of a sudden the rents ran up, or maybe they forgot how much the taxes are going to go up when you buy something that you used to have to pay $100,000 on it, and they used that formulation, and then all of a sudden their new property tax based on $63 million is now in their lap, and they're like, holy shit, what do we do? 63 million times 1.25% is a lot of money, and it's not 100,000, it's a whole lot more. So then you have to go back to the investors, which could be in insurance companies, it could be banks, it could be individual investors, REITs or syndications or what have you, and you go, hey, guess what? We're ass out. You need to give us another $100,000 out of your cash so this thing doesn't sink. And they just mismanaged it. Yeah, that's happening all across the United States right now. We see like these 400 and 500 and 600 unit apartments that are going into foreclosure in Texas right now because there's no Proposition 13. Proposition 13 keeps your property tax increase maximum 2% every year instead of it going up 8 or 10%, like whatever the value goes up every year. So it's great here in California. We're the only state that does that. There's other states that offer homestead, like Texas and Florida, where you turn 55 or 65 and your property tax levels off and it stops. But the other states don't have that protection in place. And just this morning, I'm going to look it up real quick. I did something where I got the Visual Capitalist or something. They gave me, let me share it with you real quick. Share screen, entire screen. There. I don't know if you can see this. It's not a great picture, but let me go to it. Let me see if I can get to it real quick. Introduction. So California had 6.3% increase over the last year, quarter on quarter, 23 to 24. But all the eastern states are seeing huge increases right now. If you see that, it's hard to see, I know, but like Delaware or Vermont is 12.8% increase. That means your property tax increases 12% that year.
Right.
You know, and in Texas it's 3.3. But dude, you bought a house 30, 40 years ago for $100,000 and now it's worth $500,000. Well, guess what? You're paying property tax on $500,000. If you bought a $2 million apartment 30 years ago and now it's worth 200 million, you're paying property tax on that 200 million. You don't have that in California. So something to consider, right?
Yeah, I think that's a huge part that a lot of people may not consider. There's a lot to complain about California. However, that's definitely one good thing for sure.
I mean,
I found I'm going to share this with you. Let's see.
I could tell you're on a military base. Your internet sucks.
Oh, really? I can make it better. I'll do that for next time.
Got to get on the VPN.
Yeah, exactly. That's exactly what I'm going to do next time. I don't know if you can see this headline.
Coming over. Aghast. California Insurance Commissioner blasted for skipping hearings on state crises.
Yeah. And they basically had a bunch of about 9 or 10 hours of hearings on it, and not only did he not show up, but nobody from his office showed up or anything. I found that quite incredible when it's such a huge problem. So
yeah,
I
mean, I'm not. It's inexcusable what he's doing. Right? It's totally inexcusable what he's doing. I get it. But I think the
Well,
lobbyists
I look at that, and plus the topic what we just talked about, how the correlation and how that affects the portfolios of insurers and their cash flow, and the fact that we've had other industry experts tell us that a lot of this has to do with mismanagement, and it's here we are, the consumers, wondering what's the real story. Meanwhile, the elected official we have that's supposed to investigate all this stuff isn't showing up to hearings. So I don't know.
I think we need to take a deeper look in not just the state side, but also the federal regulation. It's out of control, and it's making it so that, and I get it, we're in an inflation series that we've never been up against ever. The globe is in inflation. It's because we keep on printing trillions of dollars that make our dollars worth less, right? And I don't care if you're a lefty, a righty, a blue or red. I don't care. It doesn't matter. It's the government that's doing this. The government's doing this to keep the economy moving forward, so we don't go into a depression or a recession or whatever you want to call it this time. It's going to come around, but I think it's just inevitable. I think we're seeing it on cars. You see that there's a huge shadow inventory of repossessions in cars. We see the same problem with the lending. We see the same problem with insurance. We see the same problem with credit cards. We see the same problem in healthcare. We see the same problem with $20 an hour at a fast food restaurant in California. I mean, you can't continue to move this unless something shakes out. And real income is not going to increase to where the inflation is settling out. I don't care what you do. You can, I mean, the $20 an hour for fast food restaurant was a great thing for the fast food workers. But what they didn't realize is that if I'm a franchise owner and I'm already being squeezed from my property manager, from my taxes, from my vendors, which is keyed into my franchise, which is McDonald's or Burger King or Jamba Juice or whatever, because I have to buy their products. They're coming down and squeezing me hard all day long. I'm just going to quit. I'm going to close my doors. And guess what? Those 15 or 20 employees that I had are now out of a job.
That's right.
And we're seeing that all over the place, right? And
it's amazing the resiliency of the U.S. economy too, when you consider all of that. It makes it to believe the numbers, and I don't mean the inflation numbers. I mean the economic performance numbers. And one example that I think about, you kind of brought it up, like on the commercial side of property ownership. How those losses aren't being realized, really. I was reading articles the other day about how a lot of these I can't think of the word right now. What's the investment vehicle where you can invest in these things? Oh my gosh.
Real estate investment trust, REITs, syndications?
REITs, syndicates, and how they're allowing these people who are renting from them in these commercial buildings to delay the collection of rents, right? Because what's the alternative? The alternative is they evict them, right? And there's no rent, right? And losses have to start getting reported. But they delay how long it takes for them to pay, like different arrangements. They don't have to report those losses the same way. So. And yet, it's still a problem, right? They're not making that income. So how does that affect the investment? So I don't know. Interesting stuff happening out there.
And, I belong to a lot of YouTube groups for investment, and nobody's talking about this right now.
Yeah.
Right? They're like, invest. You're still doing great. Keep investing. And the truth is, I think one of these things, we're in a big house of cards, right? And one of these things that tip, I don't care what it is. It doesn't matter what it is. Once it tips, it's going to bring the whole economy down, and it's going to hurt a lot of people. And I know we're in an election cycle, so they're doing everything to plug the dam. But once it breaks, it's going to be tough. It's going to be tough for a lot of people. That's a great tagline.
And I'd say also for the prepared comes a lot of opportunity. So it'll be tough for a lot of people, and for those people who are prepared or who were able to prepare themselves, there'll be a lot of opportunities. That's just always the case.
Yeah.
Right?
I mean, so people are like, I talk to a lot of buyers, right? A lot of home buyers, and they're like, oh, I'm going to wait for the crash. Guys, here's the thing. You need to be able to understand when this market crashes, people here are going to be snapping up those homes, right?
Mm-hmm.
They have cash. And unless you can pay for a house, which in Santa Clara County, the median price for a house is $2 million, or the median price for a house in California is $900,000. Sure, you could buy a house for $140,000 or $400,000. You got to be ready to pay cash for this type of stuff, because when the bank owns pop in, people are not going to mess around. There's going to be 4 or 5 offers on every house that's available, because we're not stupid in this market, right? And the bank owned mitigators, disposition companies are like, drop it down, see where we can get. Drop it down, see what we can get. Drop it down, see what we can get. And there's going to be hundreds and hundreds and thousands of investors that are out there that have cash, that are ready. They have money in gold waiting to cash it out so they can buy property. They're not messing around. And then you think these insurance companies are not going to get into the business?
I'd say a lot of them already are.
Yeah, we have institutional investors that look at the lineup of who the major investors are in BlackRock, right? And BlackRock's buying up housing left and right. So we're going to be a nation not only of debtors, but we're going to be a nation of renters. And it's going to hurt us in the long run. In 30, 40 years, we're going to be so poverty stricken here and with the threat of the US dollar not being the main currency anymore, it's just going to further the demise of this great nation of ours.
Yeah, I agree with you. A lot of that stuff there, and so much is changing in the world. It's hard to see exactly how it's going to shake out. So, like, as an example of things not going well, however, there being opportunity in it. The globalization that we've seen for the last several decades, I guess probably since the end of World War II, it was kind of where it's kind of really started. And then after the Cold War ended, probably, was like lit on fire, right, with jet fuel. And we're seeing that reverse now. We're seeing how all the downfalls of what that does when you're doing just-in-time inventory and building for efficiency. COVID kind of exposed a lot of that. And there's no going back. And we're already seeing what the challenges are when you rely on certain countries that may not have your best interest to supply you with cheap goods, minerals, and God knows what else. What I am encouraged by is the trend and the opportunity. It's not going to be simple. It's not going to be easy for the reindustrialization, the remanufacturing of America. So there's a lot of efforts there. There's a lot of hearings there. There's a lot of money going towards it. There was just this convention in Detroit. I forget the name of it. Next time we should do a little talk just on this and the opportunities there, where you had a lot of entrepreneurs who were not just venture capitalists in different industries. They are in the manufacturing and industrialized, heavy industrial industries. Had their convention there, where the whole topic is the reindustrialization and specifically the remanufacturing, reshoring a lot of these things to the United States. So there's a lot of opportunity in that. It's not cheap though, right? And it's not going to be simple. And as exciting as that sounds, there's still a mountain to climb there. And I'm encouraged by the fact that there's efforts there, because if there wasn't, that'd be a problem for sure.
Right. I mean, wherever there's a shortfall, there's always an opportunity, right? Yeah. And from an individual investor, you can push your money in multiple different directions. You can keep it in the stock and bond market. You can invest in REITs. You can buy your own property and try to do it yourself. You can become a small business owner. There's a lot of risk fraught with everything, right? So those that take the risk a lot of people are going to get hurt throughout this process, but a lot of people are going to make it out. And I see it all over the place. Transfer of wealth in the next 10 years is going to be so much higher than what it is. But the sad thing is, it's going to be to the rich, the people that have already put away, the ones that are ready for this.
Yeah. And the growing wealth divide in the country is definitely a problem for sure.
Yeah.
And
you can't just, I think, you can't just look at the U.S. either. You have to look across the globe these days and see what opportunities are out there everywhere else.
Mm-hmm.
So, anywho, you wanted to talk about the NAR Commission lawsuit.
Dude, can we take like a 2-minute break? I got to pee.
Nah, 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 nah. Break. Go ahead.
All right, I'll be right back.
Well, Patty O'Malley's gone. I'll talk to you a little bit more about the pontifications of life and where we are going with this whole great nation of ours. And I really don't have a clue what we're going to do. I see both sides of the aisles. I understand both sides. I think what we need to do is just keep politics out of a lot more stuff and really figure out what's good for you. And you have to figure that out on your own, because if this shit does fall, nobody's going to be there to rescue you. They're only going to be rescuing the big mucky mucks that are the national moguls, like the big banks and the big movers and shakers. So sit back and really be prepared for what's going on. Don't overspend, live within your means, save a little bit of money for just in case, and pack away a little bit more food, dry goods, etc., canned goods, because the next 5 years are going to be really tough. It doesn't matter which president. I'll tell you that right now. I know that we're trying to keep this economy propped up because of this election cycle. And again, I don't care who's the president. I don't know that either one of them, and they don't know me, and they don't give a shit about me or you. Just keep that in mind, because this separation or this division of us versus them in the political arena, it doesn't matter. At the end of the day, there's a lot more common ground than there are uncommon grounds, and we're all here because we're trying to make this thing work for all of us. And you got to remember to dial into that one radio station, what's in it for me, and you got to figure out what's best for you, because your president, your governor, and even your mayor is probably not going to come out and help you. It'll probably be something more on the local level. So there you go. Start side hustles, earn as much money as you can, pack it away, buy gold, or what have you, buy property. And look, if you buy property, I don't know if you can hear me or not, but if you buy property and we go into hyperinflation, let's say you buy $1 million piece of property. Yeah, property tax sucks, right? There's a huge line of people that are saying that property tax should be illegal, whatever. If you buy property right now and all of a sudden we go into hyperinflation, which is a possibility, and I don't know what the chances are, but let's just say that happens. You bought that $1 million house and you have it rented out. Well, guess what? The cost of your dollar is now worth much less. So you're going to have to start charging more and start charging more for rent, because that's just normal, right? You're going to, instead of paying $3,000 or $4,000 a month for that piece of property, now you're going to be paying $30,000 or $40,000 because of hyperinflation. That dollars are worth less. It's happened to many, many, many countries, and we're on the verge of that happening. If it happens, it's going to happen. If it doesn't, who knows, right? It's not whether or not, it's just be prepared. So if you can buy a property now, let's just say 10 years after this hyperinflation thing happens, you buy that $1 million piece of property and now it's worth $30 million. Well, your money's been protected and escalated. Can't say that about the stock market, can you?
Ooh, shots fired.
I mean, think about, so I've seen things where you look at the numbers from 1925 or 1920 and you buy a house for $5,000 or $20,000, and now that house is worth $1 million, right? That's 100 years down the road. But can you say that same thing for the stock market? You can, if you buy the right stocks, if you have a smart guy like Patrick.
That's right. Yeah, and all solutions are always personal. There's no magic bullet. It always depends on your situation.
All absolutely, you have to diversify, right?
Like they say, they ain't making more land. So if you could do it, yeah. definitely. Why
It's
not?
true. Now, be aware, though, which is a great segue for our next segment. We're at 40 minutes. The NAR Commission lawsuit. Do you have any questions about it?
No, I would say, well, yeah, actually, I take it back. I'd say I'm just thinking about most people when they see it, like they see a lawsuit, they see it involves real estate and involves their commissions. I think I've read a few articles, and it's always the case, or mostly always the case. I feel like it paints the industry, and I say the industry, the real estate industry, in the most negative light in a lot of those articles. I don't think it's always fair. It doesn't tell the whole story because a lot of it's clickbaity stuff. And so I was just curious to like how you would explain it in layman's terms, what happened and how does it affect the consumer?
It affects both the buyer and seller, right? So this lawsuit started off in St. Louis. It was a class action lawsuit. And the complaint was sellers should not have to pay the buyer's agent. It's unfair for the sellers to have to pay the buyer's agent. Well, the lawsuit settled out against the NAR and the local MLSs around there. Traditionally, what's happened is we charge 6% or 5% because it's always been negotiable, right? And we split it 50-50. So if I'm taking your house and selling it, I charge you 5%, and I take half of that, give it to my broker, and I give the other half, give it to the buyer's agent's broker, and then they have their splits. That's how it's always been. So 5 or 6% of the sales price. $1 million is $50,000, right? Keep numbers simple. Well, the lawsuit claimed that the industry forced sellers to have to pay the buyer's agent. Absolutely not. Not in my terms, not in the way I look at it. The way I see it is you're paying me 5% in order for me to help sell your house. I put it on the MLS to attract those buyers. I offer a cooperative buyer
Right.
or buyer commission, right? You're paying me 5%. And it doesn't matter what price it or whatever the commission is, because you have people that do 1%, you have people that do 6 or 4% or whatever, 1% on their side and 2.5% on the other. You can do it any way you want, however it works. And the other part of it was steering. It's illegal for me to tell you that you should go to this house versus that house because I'm going to make more money on this house. And in fact, that's human nature, and it's not allowed. It's hard to justify, hard to promote. So you as a consumer are hurt because I don't get to show you that. I don't show you that house, which might have been a house that you wanted to buy, even though it only offered me 1%. I'd rather sell you the house with 2.5%. It's very possible. It's very possible that could happen. So that's why it settled out, and the NAR and MLS was at, I think, $1.5 billion or $1.6 billion. So no matter how you look at it, the lawyer that did the class action lawsuit, he was going to make, if it was 30%, it would have been like $400,000. That would have been a legacy style payday for that lawyer. Do you know how much each of those plaintiffs were going to get? $5,000, $6,000 max.
Yeah.
Right.
Yeah.
If it was 20%, it would have been 300,000, whatever rough numbers. They would have only gotten 4,000. So the class action lawsuit was basically for the lawyers to make a huge ass payday. And then it happened in Dallas, and then it happened in Washington or somewhere else.
Yeah.
And then all of a sudden the NAR went to the DOJ, said, we need to settle this out because there's no way this is going to happen. This will collapse the real estate industry. So they settled it out. And I think now for all the plaintiffs, it's $400 million. I don't know, whatever. So now, starting August 17th, which is the day after my birthday, and yes, I take gold, I take silver, I take cars for birthday gifts.
And listening.
And nobody's listening, so it doesn't matter. What's going to happen now, and it's now common practice, all the brokers are requiring their agents to take out buyer broker agreements with those the buyers. If I take you out, if I show you a house, you have to have a signed buyer broker agreement, which states you are going to pay me X amount of money, 2%, 2.5%, whatever. And that again is negotiable. It's always been negotiable. If you don't sign it, I can't show you a house. You have to legally hire me as a real estate agent to show you houses, to help you buy a house, to help you understand the entire process, to help you go through the entire process, to make sure everything's within compliance and that you're being protected as a consumer, right? That buyer broker agreement has always been around. It became a loosey-goosey thing where when the market got hot, people stopped using it, and we just started showing you properties, and maybe you would buy a house and maybe you wouldn't, right? And the bottom line is, if I take you out and I show you 10 houses and you're like, I don't like the cut of your jib, Vito, I'm not going to work with you anymore. I'm going to go work with Susie Schmuckatelli because she's cuter. There's nothing stopping me from doing that. There's nothing stopping you from doing that, right? The way it's written right now. You can go after those 10 houses, go and see the next house with Susie after you sign her buyer broker agreement and buy that house, write a contract with her. I'm out nothing. I'm out. I get zero out of that. That's the way it's written right now. In August, the lawsuit settled out saying that the buyer will be responsible for paying the buyer's agent's commission.
How is that materially different than what was going on before then?
Because before, the seller who had a ton of equity would take that 5% and give it to the listing agent, and the listing broker would share that the commission with the buyer's agent. So the money that came out of the proceeds of the sale of the house. Now
okay.
The buyer is responsible for paying that buyer's agent. So again, let's go to that $1 million example. If it's 2.5%, you owe me $25,000 for the elation and the gratitude that you get to hang out with me and help you walk through that. You as a buyer not only have to have a down payment, closing costs, and moving costs and everything else. Now you have to pay me $25,000 on top of that, right? Okay, so how is this going to work out? Well, we can go and ask the seller for 3% commission or concession on the purchase offer, or within a separate agreement. We don't know how that's going to shake out yet. So nothing's really going to change in that light. But if the seller says, fuck you, I'm taking this money and you can go figure out how to do it, you, the buyer, are now responsible for paying that buyer's agent that $25,000.
Wow.
Does that make sense? Am I making sense?
Yeah. Essentially, what used to be handled through the proceeds is now legally put on the buyer to handle.
Correct.
Right? Separate or outside of that, outside of what the proceeds, which is like, talk about second, third effects, man. Like,
right. So let's take the USDA and the VA loan, which is now allowing the concession. But before, we didn't know how this is going to happen. They're now allowing that concession to happen. The concession is the seller agrees to pay that buyer's agent through concession, right? Mm-hmm. Before, well, the VA loan is zero money out of pocket. You could go and buy a house today as long as you can talk the seller into paying closing costs, points, and whatever to buy that house. You have to have a down payment, which has to be like 2 or 3%. It could be $1,000 depending on where you live, but you can always ask for that back, right? So I'm working with an Army veteran, getting him into a house. He has like $60,000. He's buying a fourplex, and within that contract, he says the buyer receives all initial down payment back at the close of escrow. The seller also pays 3% concession towards the selling agent, which is the buyer's agent, and the seller pays closing costs, which is upwards of 3%. right? So nothing is changing as far as the end result of the proceeds. At the end of the day, the seller is still paying. That's that $1 million example, still paying $50,000 if the seller agrees to it. If the seller doesn't agree to it, the buyer is now responsible for it. And that means that the buyer has to decide, yes, I'm going to pay the buyer's agent that 2.5% or $50,000 or $25,000, or I'm going to ask the lender to put that into the closing costs, and we'll tie that into the loan. So now instead of $1 million loan, it's $1 million and $25,000.
Oh, wow. Wow.
So it could potentially hurt buyers, especially when you're really close on the debt to income ratio, qualifying, and all that other stuff. So it's going to hurt buyers. Who it's really going to hurt as first-time buyers that are now struggling with 7% interest rates, now trying to figure out how to come up with closing costs, now trying to figure out how to come up with extra $25,000 to buy that $1 million home.
Yeah, yeah.
If I have a $3 million house and I sell it and I buy another house for $5 million, I already have enough cushion in there. It's not going to hurt me that bad. I have another seller that wants to move from one place to another. They are looking for a bigger place with some more land. She already looked at this house that is now offering $5,000.
Mm-hmm.
And she's like, I will take that money and give it to you and my proceeds of the sale of the house, because I have to be paid, right? I don't work for free. I can't work for free. I can't spend, and I've already spent like 2 years working with her, going back and forth, trying to figure out which house works for her. She now has this extra money that she's going to have for down payment. So now she can afford a little bit more because her mom out back sold her house and now she has extra money. So we're going to go and do that. It ultimately hurts the buyer. The buyer doesn't get anything out of it. The seller gets a write-off on it. So how is this going to change? We don't know. August 17th is now the deadline as to whether or not this is going to happen. That could get pushed back. But at the end of the day, and I have to tell every seller that I work with, this is how it works. Well, can we do that now? I go, absolutely. You can offer nothing. But the buyer's agent is going to come back and tell you that they want 2 or 2.5 or 3%. And now you have to negotiate that with the buyer's agent. So it makes it more uncomfortable. Now the seller has to work twice as hard to negotiate the rate or the listing fee or the selling fees twice, right? So It kind of sucks for everybody. It used to be a lot more comfortable, and I get it. Yeah, people did steer. But here's the thing. If I come up and tell you, Patrick, you're going to buy that house for $1 million, they're not offering jack for me. We already have that buyer's broker agreement in place. You're going to have to pay me $25,000 to close on this house, or we can go to this other house. Right? I don't know if that's steering or not, but those are your options. And then you come up to me and say, Vito, I'm not going to pay you anything. Fuck you.
Wow.
So then your choices are, go to that other house or don't buy a house. So it's it's clouding it up and it's muddling it up. And the truth is, a smart, savvy buyer understands that's the cost of doing business. A selfish, greedy seller. Sorry, did I say seller before or buyer? Anyway, it doesn't matter. It's all sellers. If I'm a selfish, greedy seller and I say I'm not paying a buyer's agent jack, I'm only going to pay you 1% to do business with me, the agent is ultimately it's up to the agent to decide if it's worth their time to go through and sell that house, right? Because the house is going to sit on the market a lot longer because there's less and less buyers that can afford that house or willing to pay the buyer's agent proceeds or
paid, but at least the lawyers got paid.
Yeah, because everybody gets paid, right? The government gets paid, the title company gets paid, the lenders get paid, everybody gets paid. And now you're just hanging us out to dry. Yeah, it's expensive, but you know what? The average agent only sells 3 houses a year. So it's not like they're making a shit ton of money anyway. We have way too many we have too many agents in the industry, period, because the union gets stronger with more numbers.
Let me ask you this. Do you think that this might drive some of those inefficient or less experienced, less capable, I guess is the word I'll use, agents out. And so those who are best at what they do make more and drive more. I don't know. Maybe I'm looking at that right. What's the implications there?
You're spot on, right? We already have agents exiting the industry. We've been having agents exit the industry ever since the rates went up from 2% up to 6%, because it was easy to sell a house at 2%. All you had to do is convince somebody to spend another $300,000 or $400,000 on top of it. What do you care? It's an extra $200 a month. It's not that much more money. You just do it. Right. Blah blah blah. Right? Because at 2% at $100,000 is $50 a month. Yeah. If you put $400,000 more, it's another $200 a month. If you can afford a $2 million house, you can afford another $200 a month. And yeah, it sucks, but that's the going rate at that time. And properties are going to get more and more expensive because we just don't have enough supply. We have institutional investors, BlackRock and all those guys are buying up thousands of homes every month. We have mom and pop investors still buying houses. So an institutional investor is anybody that owns more than 1,000 doors. And there's a lot of them out there. That means a lot less people can afford to buy a house right now, right? Yeah. The interest rate has pushed people away, but we're also not building as many houses as we need to. Our population is growing leaps and bounds, and we're not building enough doors, enough houses, enough apartments, enough whatever to meet the demand. So on top of the downward pressure of losing that inventory, we're also not making enough property, and there's a lot less houses to sell, a lot less houses that are coming on board. The people that are selling are getting a divorce, relocation, or downsizing. They have a 3,000 square foot house and they just want a 2-bedroom condo. Those are the people. The divorcees, obviously that's self-explanatory, or you get relocated from here to, where do you live in? Golden Ridge? What's it called? God.
Colorado Springs.
Colorado Springs, right? Yeah. From here to Colorado Springs, I need to sell my house in order to buy a house over there. Smart person would take this house and rent it out and then buy another house. I know that they're going to live a lot lower on the totem pole for a couple of years, but after this happens, they also have a strategy to come back here. I have a client that's down the street. They're moving to Spain for a couple of years to see if they like it. They're renting their house out. They're not going to sell it. And it's from my advice. I told them, this is what you should do. If you can afford to do it, do it. So they're going to rent that place out for $5,000 a month, and they're going to go buy like an 800 square foot apartment in Spain and live like kings, live like royalty.
Awesome.
Right? And it hurts my pocket, but at the end of the day, I'm helping people, and that's my job, is to help people understand what the options are. So, but when they come to sell it, they're going to call me up and say, hey, I need to sell this house. No problem. Done, and it's sold. They just have to decide if they're going to pay the buyer's agent or not.
Well, and my comment earlier was like, hey, at least the lawyers got paid, right? Because that's who made out like bandits through this whole thing. And the consumer who was supposed to be served this really isn't. Right? At the end of the day, I mean, you want a professional who knows what they're doing to handle your real estate transaction. And anybody who is smart enough to realize this will be okay with that person getting paid, because them getting paid well means they know what they're doing, and I will be served well, right? It's a proper exchange of value. And so it's still not clear to me what was broke and they got fixed. And it just seems to be an example of more bureaucracy and regulation being laid upon industry that doesn't really do what it's supposed to be doing, which is to support the consumers. I don't know.
And I can tell you right now that real estate is one of the easiest industries to get into, which means that the bottom 10% of every industry trickles into real estate. Right? I don't care if you're a rocket scientist. I don't care if you're a project manager. I don't care whatever. You're like, oh, I'll just go get my license. It's 3 classes and you pass by 60%. It's the easiest test to take. To become a hairdresser it takes 2 years of apprenticeship or something like that, 2 years of courses to learn how to cut somebody's hair. To be an appraiser, it takes 2 years of apprenticeship plus multiple classes. Yes, we have to take continuing education classes, etc. We have the lowest barrier to entry, which means the bottom 10% of every industry comes in and tries it, and they fall on their ass, fall on their face, they make us look bad, and they do the wrong thing for the client, right? Which leads into the next thing is there's going to be people that offer to help you buy a house for $5,000. Is that really serving you as a buyer? No, you could. Right. If I did that, what these people are going to do, they're going to say, yeah, it's going to cost you $5,000, sign here, whatever property you do, you go to open houses and then you tell me which one you're going to look at and we'll write an offer on it. Right? We already have agents that are doing that, by the way. But how is that serving the client? How are you not pointing out all the negatives and positives to that house? There's a foundation issue. There's termites there. There's a bad fence. There's this. It's not that you can't see with your open eyes, but when you're looking at a house, you're looking at how cool the kitchen looks, how big that big screen TV is, and how you're going to fit your beds into that bedroom. You're not looking at the cracks. You're not looking at the negative things. And that's my job as a buyer's agent to help you do that. That's what you pay me for, right? On top of walking you through the negotiation process and all the compliance and all the disclosures and all that other stuff, making sure that we have the best deal for you and still getting you into a house. If I was that $5,000 guy, and there's going to be a ton of those guys popping up, $5,000 to sell your home or help you buy a house, sure, no problem. They're going to get you into contract and you're never going to hear from them again. That's it. They're gone, right? They're going to let the listing agent carry that entire transaction all the way through to close it. And they're going to get a bad rap. They're going to get a bad reputation. And those people are going to get drummed out of the business. And it doesn't serve anybody to do that. There's a bunch of 1%er guys that are out there right now that do the exact same thing. They get into contract and then you never hear from them. All you're doing is dealing with the processors, which is like we have people that make sure that all the documents are signed, we're done in compliance, all the disclosures are correct, and it's sent it to the broker and all that stuff. So they make sure that they have all that paperwork done correctly. The lenders have that too. I'm sure you do too. Those people are not going to carry that listing to close, right? It's supposed to be the agent that carries it all the way to close. We're supposed to drive and push this to make sure, because stuff happens. Like they do a walkthrough or a final walkthrough 3 days before, and all of a sudden there's a big crack in the wall that wasn't there before, and now you have to deal with that. Well, a 1% agent is not going to deal with that, right? They're going to be like, too bad, suck it up. You can get out of contract. Fuck you. Because they don't care.
Thanks for walking me through that, because that's what my intuition was when reading the articles. And as I saw it come out, I was like, well, what does this mean really? And that's exactly what I thought. You know what? This seems like an opportunity for government or regulation to overreach, for lawyers to get paid. And it was unclear to me through the messaging there that what the actual impact was going to be on the consumer. And
lost you.
I was just going to say that the impact on the consumer was not good. Bottom line. Even though the intentions may have been good, I don't know. Maybe people were just trying to get paid. That happens a lot too. And the net result was just more regulation and bureaucracy, really. So I don't know how that serves folks.
I don't know how it serves the seller, except for the fact that they don't have to. They think that they don't have to buy or pay the buyer's agent, which saves them money, but it doesn't really save them money, because again, the buyer is now much more aware of what that cost is going to be to them.
Yeah.
And if I give you an option of 3 houses to look at, and you like 2 of them, and one of them has to cost you $25,000 more, which one are you going to choose? Yeah.
Well, I guess we'll see how this shakes out. I guess maybe we'll check in on this in a few months.
We'll talk about it next year, see how it works out. I mean, they could push it just like everything else in the world. They're pushing out all sorts of different things. So they'll probably push it. Everybody's like August 17th. I'm like, okay, whatever. It'll probably be August 17th, 2025. But who cares?
Yeah. about next time, man. There's a lot of great topics to cover. So
yeah, let's get Taylor back on to talk to him about the bond, the surety bond.
Yeah,
I don't even know anything about that.
Yeah, I'll reach out to him, see if he can speak on that. Also on this whole regulation stuff. I don't know if you followed the whole Chevron deference thing, how that hearing and that ruling, I should say, how that could have potentially have a big impact on people's portfolios. So we can get into that next time too.
Yeah, it's so far-reaching. I don't know where it's. I haven't spent time to fathom that because, what does it mean? All I'm hearing is, oh, Trump doesn't have to be prosecuted, or I don't know.
This is different. This is a completely separate thing. This involves basically regulation of the markets, and well, I take it back. It involves the limiting the power of certain agencies in the federal government to regulate. So this is which will directly impact people's wallet.
All for the better, I'm sure.
I think so. In this case, I think it will be better.
I hope so. I mean, I have to say that I'm a lot jaded by this government.
Yeah, for sure.
I love this country.
Yes.
It's a government I don't trust.
With the 4th of July being here. Happy birthday to the original American startup.
How old is the United States now?
243 or 244, something like that. 243.
248.
Oh, shoot, I was wrong. 248. I don't know where I get 243 from.
And the Marine Corps is 1 year older.
Mm-hmm. Of course.
246. No, 224. Where is it? Yeah, we're born 1775 versus 1776. So we're 1 year older.
Hoorah.
You guys are older than that, though, right?
No, I think the Marine Corps holds on the mantle of being the oldest branch, I think.
I love Google. Which
answer.
U.S. branch of the military is the oldest? Maybe it's the Navy. U.S. United States Army, June 14th, 1775. So you're older than me, technically.
I don't know why I thought the Marine Corps was the oldest. Maybe that's just branding. They're better at branding that.
Yes, we are, because we're a bunch of Uncle Sam's misguided cult.
And thank God for him.
That's right. We got to pull.
All right, man. Maybe we can wrap this one up.
All right. Have a good 4th of July. Always good talking to you. I'll talk to you next week, man.
Hey, what was I going to talk to you about?